All right, good morning, traders, and welcome to the opening bell. Today is Wednesday, June 3rd, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the day with you guys. It looks like things are flaring up in the Middle East. We did get a exchange of fire from both Iran and the U.S., bringing into question, again, the sustainability of the ceasefire and any progress, if any, that's being made on negotiations. You're seeing risk a little bit tippy today. You're seeing equity markets a little bit mixed. Last time I checked, S&P and NASDAQ were poised to close just a little bit lower. Dollar catching a bid here and now right back into critical resistance. Euro dollar into critical support. So we're finally getting a test of the key ranges that we've been watching. We'll go over all the US dollar crosses, gold, Bitcoin, which that breakdown has continued. I shot a video for StoneX TV earlier today. We'll go over those levels as well. Any questions or trade setups you want to review, feel free to throw them on the message board. We'll be getting started in just a moment. All right, great to see everyone in the room. Latanya, good morning to you. Iman says, good morning, Mike. Hope all is perfect with your family. Thank you so much. Angie, Ashish, Chris, Dan, JP, Ken, Kevin. Not going to get to everyone, but great to see you guys this morning. Here's DXY. Here's resistance, 99.50, 99.52. We've been talking about it for a couple of weeks now. 618 retracement from the decline off the highs made in March, the January high, the gap that we made back in April, the highs from last week. All of it converged right here. Real moment of truth for the DXY. Here's the daily chart, really just highlighting the highs that we made here, the nature of this pivot zone. You can see some swing highs even from October of last year. So this is really kind of do or die. Here's DXY in the weekly chart. It's been a while since we looked at this. But again, first major hurdle. If this opens up, next major hurdle. Okay, you're looking at the yearly highs. You're looking at 101.15, spot 45. On the daily chart, I have 101.15, spot 34. It's the 2024 low close. On the weekly chart, it's the weekly close. But here's the 2024 low and the August high. All of it converge on the, again, the November highs from last year. All of it converge right there in uptrend resistance. So it's really, the onus is on the bulls to get the pop and close northbound 9950. DXY at resistance within the uptrend right into the start of U.S. trade today. Now, we did get those figures, those ADP figures coming out stronger than expected. ADP blowing out at 122,000 versus 117,000, previous read of 105. Everything bright and cheery on the employment side. We'll find out on Friday with the more encompassing non-farm payroll report. But all things held constant, the employment labor markets look stable. Puts the emphasis on inflation. Inflation numbers come out next week. CPI is on tap next week for the US dollar, and that's going to be critical with the focus all now going to the second part of the dual mandate price stability. Inflation is seen higher. The rise that we're seeing in the conflict in Iran today is fueling oil prices, which have popped higher. Gold starting to come off a little bit again. That thing's a mess. I'll show you that chart in a moment, but we really got to take a sidestep there on gold. But for the dollar, here's the rally back into resistance. So the markets are really sort of tiptoeing here. You have the concerns now. There were some reports circulating earlier today. I guess not so concerning for us here in the room. I've been saying this since the start, guys. Warsh is suggesting in some commentary that's going to coming out that they're likely going to have to remain on hold. And in fact, the markets have responded in kind. Here's Fed Fund futures. We just looked at this yesterday, guys. Expectations for a December rate hike are right back at 60%. They were just below 50 yesterday. It might have been Monday I showed you this, and it was 51% for a potential hold by the end of the year. Now the December read is starting to read 60%. We're going to get 25 basis points or more in hikes. So that expectation giving lift to the dollar and certainly putting us right at resistance right into the start of the session, right on the back of that ADP report. NFP's on Friday. Here's what it looks like on the euro dollar, right at support, 1578, 1598. Same region we talked about earlier in the month, same region that's held the lows for the last 2 weeks. That's the 618 retracement from the advance off the low and the January low close. Okay, really nice pivot in price. It converged on downtrend support last week. Now it converges on the 25% parallel. So any way you slice it, remember earlier in the week, we said, hey, weekly open resistance is 1659, initial resistance 1680. We want to see that hold if we're heading lower. Guys, we couldn't even make it to the weekly open yesterday. And then we turned lower. We're right back at key support. Again, daily chart highlighting the severity of the pivot zone we're up against right now. A downside break from here, a close south of 1578. There's not much until 1480. It's 100 pips lower. Now you come into slope, okay, and that's going to be variable on time. That could hit near 1550s, 1540s, depending on where we are. But the next major lateral level is down at 1483, excuse me, into 1498. You're talking about the November low day close, the March 2020 and the 2022 swing highs, the 1618 extension from the decline off the highs. 1, 2, 3, right there. All of that converge on this major pivot zone. So the levels are very clear. Euro's at support, DXY's at resistance, right into the start of the session. If we get the fueled break, that's the next move for the extension or the resumption of the uptrend in the dollar and the downtrend in the euro. That's kind of the focus on where we are right now. If you're holding short exposure on euro, holding long exposure on dollar, this is where you want to get a little bit more defensive, okay? Bring in protective stops. Make sure you're going break even or better. This is the inflection zone we've been watching for the last 3 weeks. We're there right now. Sterling, even Sterling participating here. Remember earlier in the week, I was like, I don't know. This was such a major pivot at the yearly open, but last week, it was a mess. We broke and closed above it, then we reversed and closed below it. And so like the efficacy of the pivot zone comes into question, but nonetheless, man, perfect inflection. Yearly open, 34.74. February low day close, 34.65. 10 pip zone of resistance held for the last 4 days. Here's the turn lower. Initial support's being tested right now. That's a 200-day moving average. You'd need to close below 33.50 to validate a break of that late March uptrend. So it's still not like a super conviction bias trade, but I did like the reaction that we got along that yearly open right into the open of the week. Now, the weekly range low that we executed right there on Monday comes in just below that 200-day moving average. So that's your sort of initial support pivot, 34.10. And then if we break the 33.49, 33.50, that needs to give way. I know we dipped through it and we made this close below it a couple of weeks ago, and then the outside day reversal completely disputed that. But I'm still, it's still a level I'm looking at. Look at the January swing low is there. Look at the opening range high for April. Still a nice pivot zone. Still watching 33.50. That's the break that would be needed to invalidate the uptrend. That being said, Sterling's pulling back from resistance, but we're still within the uptrend. Okay, we're at initial support at that 200-day moving average. Look for reaction there. If we pivot and close below it today, keeps the focus on a potential test of uptrend support. But least conviction out of the 3 we've covered thus far is Sterling. Okay, Aussie dollar, number 4. Here's what Aussie looks like right into the start of the session. Haven't gotten the break yet, but still looks pretty decent. So the monthly, weekly open 71.85. It's unbelievable to look at these charts, guys, with the levels that we were talking about on Monday and Tuesday. Just textbook, right? There's the hold. Remember, that was just the swing high that we made in last week on that pump on May 18th, right? And then we tried to say that was the line in the sand. Friday, we pushed right through it and we closed right there. And this same exact phenomena happened on numerous US dollar majors on Friday. So we started off the week and the month. That's your objective monthly open. That's your objective weekly open. Resistance. We tried to test it again yesterday. Resistance. Here's the push. The weekly range low comes in right there at 71.34. Key support, 71.08. All day long. All day long. That's the break that would suggest deeper pullback within the broader uptrend for Aussie. The median line has held every single prospective break on the pullback since last month. So that 618 or that 38.2 rather, that would necessitate a break of that median line, and that would necessitate a break of the weekly range lows. That's your key support. That's the low day close, by the way, for last month. So not quite a break yet. Not quite at support yet, like Euro is at support and DXY is at resistance is Aussie, but looking to challenge the initial weekly opening range lows here. 71 is key support. 71.85 still resistance. Key resistance and bearish invalidation remains 72 into 72.13. Last month's open, the 100 and the 618. That's the break that would suggest invalidation of that May downtrend. Makes sense? Still looking for a clear-cut breakout here. Dollar CAD. So right back up, 38.78. Just technically clean trade. Maybe last week we had the bullish invalidation here. Maybe that was a little too close to the chest because that perfect test of support, which we questioned on Monday, has held. And we were talking about this on the webinar on Monday and Tuesday, saying, look, if that was it, and that was just a test of uptrend support, then I don't want to see anything below the monthly open, the weekly open. Yesterday's pullback turned right ahead of the 200-day moving average. Here's the extension. Initial resistance 38.78. Still looking for a reaction there. I don't have that 786 on the daily chart. Let me just show you how it looks. It's right there. Okay, so we're basically right below it. But you run into some cluster zones of resistance right into 39 if this breaks. 39.15, 39.40. The 2026 high day reversal close and the objective September high day close and the October low day close. Okay, all of that converges right there on uptrend resistance over the next couple of days. So if this breaks, that's your next major zone of support. Initial support now, right back at the 200-day moving average, all the way into 37.95. That's still bullish inval. Anything below the weekly open, the monthly open, would necessitate a break of slope, would necessitate a break of that 200-day moving average. That would suggest a more significant highs in place and the potential for a larger setback. So near-term bullish invalidation, key support 37.33, 37.25, initial resistance 38.78, topside break 39.15, 39.40 all day long, right up here. Could be out here in time based on the slope, but that's kind of the region of resistance you're looking for if this breaks. Dollar CAD at resistance right into the start of the week. Don't forget, on Friday, you get non-farm payrolls and Canadian employment data at the same time, 8:30 Eastern. Double whammy jobs Friday, still on tap this week. 1, 2, 3, 4, 5. That's number 5. Number 6, dollar yen. So we're tempting the BOJ, and it keeps pushing higher. And here we are, right at the weekly highs. We defended key support, which we highlighted yesterday at the objective weekly open. It's 59.27. We got as low as 59.37. Then we rebounded. We're right back at the highs. This trade is, again, as I said, the risk. I just finished writing a piece for this, guys. That's going to be on FOREX.com. I think at 10 o'clock this morning, it'll be published, but it's on the weekly chart. And I just wanted to highlight, this is fresh in my mind. You know, this is the 4th consecutive weekly rally. Okay. We've rallied more than 21%. No, what am I saying? Oh, guys, did I lose you? I think we're back. Sorry, I've got a little glitch in the market here, or in my screens. The advance has rallied more than 3% off the monthly low, and that rally is already at the major resistance zone, just ahead, 60.29 to 60.73. That's the high close for the year. Okay. Thank you, Latani, saying, no, we're here. All right, cool. Yeah, my screen just went black for a second. And then the 2024 high week close. The week the high was registered, the close of that session gave you 60.74. That's exactly where the high registered in April, literally. One other piece of note, I just want to throw that as just some more reference. You know, I always tell you guys, when we get these massive outside weekly reversal candles, my initial instinct is to look for a breakout of that range for guidance. We got one right here. It broke into late March. You got the rally. We're still trading in that outside weekly reversal range. And this is also the high week close for the year. This was the week that the high was registered. So that is to say, guys, this whole rally still puts a massive range into focus between 55 essentially and 160. I hate it. It's 500 pip range, but that's where we're at. That being said, 4 weeks up, we're trading into resistance. Again, 60.29, 60.74. That's the major hurdle you're looking for. Dollar yen on the daily chart. Here's your pivot break above 59.50. This was the level we were looking at last month. We tried to break through that. We even tried to push through it multiple intradays. We did an outside reversal candle. We just broke that outside reversal candle range right into the start of the week on Monday. That broke higher. And we said, look, it's really close to the chest. I would want to see acceleration here. But look, let's just keep it constructive above the monthly open. An overnight trade. Again, we went right almost for a test of the monthly open. Here's the whipsaw. So yes, Dan, my sense is the BOJ is watching that 160 level. Dan, it's not just your sense, brother. It's reality because this is where they came in. So the intervention risk looms. Intervention aside, it is a constructive trade approaching resistance. Now, it just so happens that that resistance level is where the BOJ stepped in. So you're playing with fire. Okay. Any long exposure you have on this, you're a very good candidate for a trailing stop. You want to be a lot more defensive at this point. Raise protective stops, go break even or better. Reduce position size heading into 160.20s. If you're looking for a new exposure, this is not my cup of tea. We're looking for potential inflection here. You have an X factor of an external, player here that could step in and just shift this at any moment. So that being said, from a technical standpoint, you are heading into resistance a little bit higher from where we are now. Questions on dollar yen? The risk off is still favoring this, right? Interestingly. Okay. Any other FX crosses you guys want to look at? Do let me know. That's everything that's kind of on my menu right into the start of the week. Look at that break on DXY and Euro. I think that's going to be the major tell. They're testing major inflection here today. Here's what gold looks like. The chart's getting really messy, but our sort of line in the sand has broken. Remember, right into the start of the week, 44.54, we said if this breakout is legit, and we talked about all the technical factors of why that reversal off of this key region was so significant last week. If that low was really a legit, more significant low in price, we want to see 44.54 hold. We've broken below that now. Okay, so that's null and void. Doesn't mean that interpretation is necessarily wrong, but we're no longer basically bullish from here. That's a break of the objective weekly opening range. Here's your weekly open. You set a low, you set a high, you test the low, it breaks. You look for a late week low. So that once again draws the risk for a retest of 43.83, 44.06. That's still key support. 100% extension from the decline off that April high, the 618 from the ascent off the yearly low, the low day close for the year, and the 200-day moving average all converge right here. So yes, the near-term focus shift has broken lower, but you're heading into longer-term support. So take that for what it's worth, guys. It's not a trade that I would go chasing, but certainly if that low is going to hold, that key support structure still remains intact. 43.83, 44.06. Anything below that, you're looking for the yearly open. You're looking for 42.22, 42.25 rather, that 100% extension off the highs for the year. So it's on, game on. This is key support. Bulls need to defend 43.83 if there's any hope of a low in gold. Here's what Latanya says she wants to look at EuroCAD. Sure. Let's take a quick look at EuroCAD. What's that doing? Ooh, okay, that slope didn't last long. Okay, you're at resistance. You're at yearly open resistance. Let me check the weekly charts again real quick. Yeah, major pivot zone. Major pivot zone. Okay. So right off the top, this is your 2018 high close, just the high close for the year. Okay, nothing fancy. It's your 2018 swing high, nothing fancy. Really nice pivot in price. You got your 52-week, the yearly moving average right in there. And you have the high week close for April, the week the high was registered, the close of that session is also right there. On top of all of that is the objective yearly open. So it's loaded, okay? It's loaded. It's also the 618 just from the drop off last year's high. So you're at resistance. Your ideal play here is that your monthly opening range takes shape right below that resistance. So you look for the breakout to give you guidance. Topside breach above 61.52 needed to validate sort of a breakout of last month's high and also that key pivot zone. This is the 2018 high close on the daily structure. Let me just see. That was last week's open. Okay, could be a near-term consolidation play if you take just the most recent highs, lower highs, higher lows. Here's your weekly and monthly open right into resistance. This is shaping up to be a decent range breakout. Momentum still constructive, getting some divergence into that high. So the rally, the May rally is vulnerable below 61.50. All right, Latanya. That's all I would say on this front. Now, as far as like initial support targets on a basic pullback, that 618 right there comes in line with slope support. Let me clean this up. Get your 38.2 is probably support too right there. Watch this setup right there. One other thing, this is going to get really cluttered. I just want to see what this looks like. Bear with me one sec. Maybe a little bit cleaner, but not worth taking a look at right now. All right. Keep an eye on those levels. That's what I'd be working with near term. Rally, the rally from May, the May rally is at risk while below 161.52. Near term, the focus is on a breakout of the weekly opening range, which is basically comprised by just that one single candle that we made yesterday. So look at that. And bullish invalidation, or at least the break of the uptrend, the validation would be a break below 160. That would basically challenge right back again at last month's low. But that's what would need to hold. Look for a breakout of this massive consolidation. Not surprising on Euro CAD, given the relative performance of Euro and CAD. Make sense? And Tani says, okay, right on. Hope that helps. Good morning, Michael. Mesfin, great to see you, sir. Says pound yen. Let's take a look at pound yen, the Widowmaker. What is that doing? Pound yen. All right, I don't know how much I want to put into that stock for a potential breakout of that consolidation, but let me take a quick look at the weekly here. Pound yen. Man, you're playing with fire on this one, Mesfin. My humble opinion, brother. It's look, it's going to be the same story in all the yen crosses. If you get the intervention, this thing is going to jackknife you. It's a constructive trade on paper. It's a constructive trade on paper. You're trading right into the yearly high close. Here's your yearly high close. That's right at 215.77. Is that right? Nope, 215.69. So that's the weekly chart. Third week advance, you're right into resistance, momentum, divergence into the highs, price action with a higher high, the oscillator with a lower high. So it's not exciting to me. Here's pound yen on the daily chart. Let me see what I've been working with here. Basic pitchfork off the low, high, low. Puts you right at resistance right now, right at the median line. You see that? Forget this high. You see that right there? A high day close from back in February is a very nice pivot. Comes in right in line with the monthly low and the monthly open. That's 214.31 into, what is that number? Into 214.20 right here. That's support. Your weekly and monthly opening range is set right below slope resistance, right above slope support. Look for a breakout. 4-hour chart. 3-point touch support. Could be channeling here to the upside. Nothing really crazy. Here's your weekly and monthly opening range so far. Not so much a bearish divergence here. Yeah. I have us on near-term resistance. Not my cup of tea. It's a yen cross. I don't like any of the yen crosses right now. Let me just see if that 786 caught the high by any chance. Wouldn't stress it. Keep your eyes on that. Keep your eyes on that. It's a constructive trade, but you're trading into resistance anyway. You slice it, specifically on the weekly chart even. 215.70 break, close above that on a weekly basis, fine, mark resumption. Again, you're testing the BOJ. Pound is our least favorite dollar cross. So for obvious reasons, Mesfin, this is would probably be one of my least favorite setups that we've covered thus far today. But those are the levels I'd be looking at just for reference. Also, the 618 of the rally here probably converge right on that slope. And that support, bullish inbound right there. Make sense? Okay, and we covered gold, Bitcoin. So again, I just shot a video for this, so it's fresh in my head, but some real near-term targets that are kind of in view here that are very, very critical to where we are. And that's 65,954. The March low day close was initial support. This is a new slope I just added. Remember, we were working with a previous slope on this one. This one right here, right? That broke with spectacular fashion yesterday through key support. That key support was the low week close for the year and the low day close for the year, 70,283 into 531. Broke, acceleration, beautiful. We've invalidated the February uptrend. Fast forward, there is a new formation that may be in play here, which puts into play just a basic high, low, high, the median line break, beautiful acceleration. Here's the 25% parallel right on that March low day close. Initial support, 65,954. Now, if we're heading lower on this stretch, rallies would need to be limited to 70,531. A break below this parallel opens up subsequent targets at 62,795, which is just a low close for the year. And then that key support zone that we were talking about since the start of the year at 57,885. 58,725 is going to be that August 2024 low week close. Nice pivot in price. Both of those converge on the 2023 trend line, and are going to converge on downtrend support basically into the later part of this month. So that's the threat. Now, bearish invalidation, the level that would need to be broken for us to suggest a more significant low is in place, a larger breakout is underway, is right up here. Why? That was last month's opening range low. That was the pivot break that it was the onset of this, the origin of this decline. This would necessitate a break of the monthly open and the monthly opening range high. And that's just an objective pivot for that 2025 swing low and the close low and that high that we registered back in March. So that's bearish invalidation. If we're heading lower on this exact stretch, rallies should be limited to 70,531. A break below support at 65,954 would open up 62,795 and 58,725 into 57,885. As always, guys, not a trade recommendation from FOREX.com or StoneX. It's really important to understand this is just my humble interpretation of the technicals as they stand. But that's a break. That's a break. Mesfin says, thank you, exclamation point. As always, I like to hear from you. It makes sense. Right on, Mesfin. Anytime, brother. All right. So that's everything that's on my list as it stands. The deterioration in the war headlines is not a welcomed development for the markets. It seems that sentiment is still on the back foot, but don't underestimate the strength of the equity rally, guys. Everything held constant. Markets are still poised to move higher. We are testing uptrend resistance. We were talking about that on the S&P 500 earlier into the start of the week on Monday. That's still in play. Here's what it looks like. So there is the potential for some kickback here, but the broader market sentiment still remains constructive. The risk near term is that we just exhaust for a pullback. Momentum is threatening a break below 70 for the first time this week, and I guess you could say this month. NASDAQ, similar scenario underway here, although not quite anywhere near a break from overbought conditions. So that's still in the breakout trade on the daily chart. The Dow is the last one which kind of looks a little bit vulnerable here after that break of the yearly opening range, which was way delayed, right? NASDAQ and the S&P both broke the yearly opening range way early in the year. Dow just broke here a couple of weeks ago. So we have an outside reversal candle to the upside yesterday. Look for a range breakout of that, or look for a breakout of that range rather for near-term guidance. But that might be another signal that we might be exhausting on the initial approach here for stocks. All right, that's 10 o'clock, right into the hour. We'll go ahead and wrap it up here, guys. Best of luck trading. Keep in mind, we still have that major event risk on tap on Friday, so trade a little light as we just start to tiptoe around the opening ranges for the month. Keep your eyes on that DXY resistance, Euro support. That's going to be absolutely paramount today, and we'll pick things up tomorrow morning. Till then, best of luck trading, guys, and God bless.